about that. What does he say about the Steve King and the Congress, the body on which I sit? The president has had not one word to say. And I'm pleased that my counterpart, Republican, doing body on which I sit. The president has not one word to say. King, and I'm pleased that my counterpart, so from all the things the first doing very nicely, the president has not one word to say. I want to see a photo.
All right. It's that time again. Early morning crypto talk. Bitcoin Brandon here from Los Angeles, California. Good morning, Sunday morning. Welcome. Go ahead and type in the chat box where you're listening in from. We have Bethany Gibbs from Seattle. Mafus, Laurel, Maryland. Barbara Vallejo. Eric White. Brenda Abram from Oklahoma City. Sharita Hill from Nashville. Cleve Stewart, New York City. Lorna Vasquez. As a disclaimer, I am not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share a suggestion, and it is up to you to make an informed decision on which direction you want to move into. Rohan Johnson from ATL. Make sure you guys hit the thumbs up button in the YouTube channel. The 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money that you cannot afford to lose. Rule number 3, Always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Make a decision, stay focused, and don't get distracted. Now, this is not going to guarantee you having success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. Good morning, Jacqueline. All right, so let me get screen sharing going. We'll kick this off. All right, you should be able to see my screen. Let's see what the market is doing today. Coin market cap is dropped 119 billion. Oh, I can't believe this. Do you know? Sometimes I hate being right. Didn't I just say this yesterday when I did the special crypto talk in the group? That was a soft cat bounce that took place here, and that it was going to drop. And you know the mistake I made? I was sitting around and I was not paying attention to the market last night. And I was waiting for this to go to about 3780 to 3800. And then I was going to move my coins into Tether. It didn't get that high. It only got to 3,700, and I should have made that move here, and I didn't. And what happened? Dropped. And I knew it was going to happen. That's the funny thing is, you know, at the end of the day, what my own experience, what I found was I've been right most of the time. The only thing that I get off is the timing. The timing. One, I missed timing by 1 hour that cost me, but the timing. But most of the time, I'm correct on this stuff. So you see, as an example, remember yesterday I said I would move my stuff into Tether. Had you done so, and the market dropped, you would still have this value here. I didn't make that move. I should have, but it's also stabilized. So here's what happened. This is why knowing the buy wall and the sell wall is so important. How when it dropped, it got up to 3,700, right? That 3,700 was around here. And then it bounced back down to 3,500, which is where we're at right now. Now, this is interesting. This sell wall is very, very low. This has the potential to do a run up again. So I'm going to sit tight, not do anything crazy. Remember, you only lose when you sell. I'm going to sit tight, see what happens. Now, Poloniex numbers are different. Poloniex is showing 35.32. Coin market cap is showing 35.95, so not that much off. It's still a negative 4% change on both for the last 24 hours. Let's look at the rest of the coin. So the market lost $3 billion last 24 hours. Tether's in the green. Why? Because people did what I said yesterday. They moved their coins into Tether before it dropped. Unbelievable. People did. I want to kind of kick myself right now because I said it yesterday afternoon, and then I went off and I was enjoying Saturday and watching the Laker game, and then I watched the fights, UFC. Then I watched Manny Pacquiao. Then I went to sleep. Didn't even cross my mind, and didn't even think about it. And look what happened. So, anyways, best performers the last 24 hours. Apollo Currency, 10X, Ravane, Holo, the number 47 coin. Augur, Pundi X, 1.85% after a drop, but it's still in the green from the last 24 hours. Worst performers: Launchain, Loopring, Wax, any top coins. Neo, -7%. Cardano's down big. And EOS, -6% for both of those. Here's one thing that I still am true on. I still believe the market's going to drop below $3,000. So I could go ahead and move my coins over at this price. I won't, because I bought in at $39.80, and I don't want to take that $400 point hit. That's why I was waiting for the sucker to go to at least 3,800. But it hit 3,700. That should have been, I should have been cool with that. You know what? Let me go ahead and make it happen then at that 3,700 mark. And I didn't. I thought a little bit greedy, said I could shorten it up a bit. I'll just wait. No. So the next thing I will pay more attention to is this wall here. It's saying the sell wall now is 35.57. Where are we at right now? 35.30. So we're right near that top of that sell wall. The buy wall, though, is at 34.91. Yeah, this thing is gonna drop some more. 35.61. And then next is 3,600. Doggone it, Brandon. Pay attention. This is why I can't wait for the auto systems to come in. What do I mean by that? Well, we're about to launch our Forex trading desk and our crypto trading desk. I want to have it automated, so I don't have to worry about it. I set it and go. So, but it's good to know and learn these things so you understand what's taking place. Okay, some articles up real quick. Let's see. Hacked customer data from world-leading cryptocurrency exchanges for sale on the dark web. Customer data. Oh, he's just blowing me up now. All right. Albert Thomas. I had Albert later on. So hacked customer data from world-leading cryptocurrency exchanges for sale on the dark web. Paste this. On a darknet market called Dread, a vendor going by Exploit Dot is attempting to sell user data from the Know Your Customer data top cryptocurrency exchanges asked for required by most jurisdictions. Okay. According to data shared with CCN, the hacker has an ad that has been online since July 2018, in which he claims to have hacked documents used in KYC checks, including the identity cards and driver's licenses from users of top exchanges like Bittrex, Poloniex, Bitfinex, and Binance. Well, I mean, that's all of them. That's all our major exchanges. Bittrex, Poloniex, Bitfinex, and Binance. The data is seemingly for sale for $10 per 100 documents or more, with discounts applying for those who buy in bulk, all the way up to $1 per 1,000 for an order of over 25,000. CCN was able to independently verify the ad on the dark web, which is still online. No links to it will be added to avoid promoting the service. You guys have to understand something. Do you know where the money is now in the world? I mean, it is not on subscriptions. For example, like the cell phones. How are you able to have no cell phone bill for 5 years and you only pay one time? Because cell phone companies don't make their money off you paying a monthly bill. That's not where they're making their money. They're making their money off of your smart devices collecting data that they sell. And in your contract, you're giving them permission to do so, which most people don't read the contract. They just want that cell phone, $900 cell phone that they only have to pay $20 a month on their cell phone bill. That's where these companies are making their money, the data. And that's going to go for all services. Soon, you're going to have all these providers will pay you to use their service. There's an app right now called Sweatcoin that tracks all your steps when you're walking around outside and you're jogging and stuff. And guess what? They're paying you to walk. What? Well, how are they making their money? See, people think, oh, they're making their money on ads. That's partially true. They're making their money off of selling your data. That's where the money's at. So let me continue. A cybersecurity expert, you know, and here's the funny thing too, because I'm all excited about eliminating your phone bill, right? I haven't even talked about that the same company is going to be able to pay you to talk on your phone. How would you like to get paid to talk on the phone? And you're not paying a bill either. What? I'm not even going to talk. I'm not even going to bring that up just yet. A cybersecurity expert who contacted CCN and chose to remain anonymous has detailed that after contacting the individual posing as a buyer, he was able to get 3 free samples out of him as proof that the leaked documents are legitimate. As proof, the cybersecurity expert got pictures of individuals holding up a piece of paper with the word Binance and the date the picture was taken at. In these pictures, their faces are visible as well as their identity cards or driver's licenses. There is no such thing anymore as 100% secure. I mean, you can do the best you possibly can unless you really control everything like you should your coins. You definitely don't want to put all of your coins on any exchanges. But you can't avoid the exchanges if you want to make your money, pull your money out, trade. You can't avoid them. So this, like, in a sense, this what happened here, there's nothing any of us could have done except we said, well, I'm just not going to use those exchanges. Really? Then what exchange are you going to use? Bittrex, Bitfinex, Binance, Poloniex. Those are all the top exchanges. They definitely don't want to stick to freaking Coinbase. They already gave up their data to the IRS. Especially if you do anything, well, what is it, $30,000 or more on Coinbase? If you want to do business in the United States, they have to collect your. Someone says, well, can't the exchange or can't we just refuse to give our KYC information? No, because then those companies aren't able to operate in the United States because of anti-terrorism laws. AML, anti-money laundering. KYC means know your customer. If they want to do business in the United States, they have to collect your data. And then the thing gets freaking hacked, and then now your data's out there for the world. It's like a lose-lose. Uphold as well is doing the same thing. I got flagged on Uphold because my accounts were too big, and they wanted. I was like, what do you want now? What, you want my blood type? They came at me and said, you made a little bit too much money, and we need to know where this money came from. Literally, that's what they said. And I made the mistake of combining. Normally, I would use Uphold just for KGX, but before KGX was there, I should have created another account for KGX. I used the same account where I had I made a lot of money in 1 month in crypto, and it hit that same account and I forgot about. And they're like, where did this come from? I said, you already got my information. We need more. He said, you got my driver's license. We need your passport too. We also need to have some of your your utilities because we want to verify your address. And then they even track, the government says you sent money through Western Union over, and they were able to track that I had took Bitcoin to my bank account. Then from my bank account, I used Western Union to send money to a different country. I said, "Are you serious?" But you can't do business without it. If you go to another exchange that's not doing all this KYC stuff, now you're open to risk of that exchange running off with everybody's money. And it's happened before. You're damned if you do, you're damned if you don't. All you can do is be as much protective as you possibly can for yourself. Let me see what this says. Let me continue. The exchange's spokesperson allegedly further noted they have their theories in regards to how this information may have been obtained, detailing that no signs of unauthorized access to their system had been found. Inside job. CCN has reached out to Binance to clarify the situation, but hasn't heard back at the present time. Binance is notably an exchange praised in the crypto community for security practices. Recently, it foiled the plans of the Cryptopia hacker by freezing the stolen cryptocurrency, and last year thwarted a large-scale attack that saw Syscoin surge on its platform. Whether the leaked documents are connected to the recent collection number 187 gigabyte database leak, which includes over 700 million email addresses and 21 million passwords, isn't clear. The Lee Diggy Atlanta boot camp, is there a date yet? Yeah, February 22nd is the Atlanta boot camp. February 22nd. We will have, this week, we will have the flyers and stuff for that and the advertising. Next article up. Here's this one first. What are crypto executives still positive about after massive 80% Bitcoin drop? Yeah, because it happened before and they still got rich. Happened in 2014. If you are if you're that type of personality that, gets really nervous about losing money and you need security and stuff like that, listen to this very carefully so you see how the people who have real money in here are operating, okay? I'm not talking about $5,000, $10,000 that is part of your savings. I'm talking about they've got millions in here. How are they looking at this? In 2018, with the exception of Bitcoin and several other crypto assets, the majority of cryptocurrencies fell by more than 90% against the US dollar. Executives in the crypto space, especially those leading new initiatives and businesses in the emerging industry, believe that the bear market has presented companies with positive opportunities to rebuild the foundations of the asset class and the sector. The majority of blockchain projects developing protocols or decentralized applications have conducted ICOs or token sales in 2017. As such, the valuation of many blockchain companies has been dependent on the performance of tokens. During a bear market, as seen in previous years, cryptocurrencies with strong fundamentals tend to survive and demonstrate minimized losses. According to the data provided by ATH Coin Index, most major crypto assets such as Ripple, Ethereum, Bitcoin Cash, Litecoin, and Cardano have fallen by 90 to 97% from their all-time highs against the US dollar in the past 12 months. Meanwhile, Bitcoin, the most dominant cryptocurrency in the market, has dropped by 82% in a 12-month period. Bitcoin remains as one of the few crypto assets to have seen an increase in hash rate. Okay, here's one thing that when they always talking about percentages. Hey, Patricia, you arrived, and I just covered your article already. You're going to have to go back and listen to this from the beginning. I got that article from Patricia, the last one. So when you hear 82% loss in a 12-month period, you also have to understand that it had a 300% gain in the 3 years previous to that. 300% gain. All right. All right, let's go. Considering the tendency of small market cryptos or tokens to fall by large margins in comparison to Bitcoin on a downward trend, during a correction, investors often acquire blockchain projects, building long-term blockchain-related applications, protocols, and solutions at a substantially lower price. That's what they're doing. That's buy the dip. Sherry Kaiserman, the principal advisor of a U.S. investment and recruiting company, Macco.la, said, "We felt like the best way to make money is to buy the infrastructure companies, the picks and shovels that are helping build the foundation. They are coming down in valuation, which is the best part of the crypto winter for us." At the peak of the crypto market in late 2017, many blockchain protocols were valued at billions of dollars, and the majority of the projects failed to showcase working products and active user bases. In the past 14 months, blockchain projects have fallen to a reasonable valuation, presenting opportunities for investors to acquire equity in infrastructure building companies. Easy to pick up talent. Previously, CCN reported that the salary of blockchain developers in regions like Switzerland have increased to around $180,000, triggered by a growing interest in blockchain technology internationally. But job offers in crypto, at least in the past year, have mostly been presented by blockchain companies that have obtained capital through token sales. As blockchain protocols began to decline in valuation and teams started to experience a funding crunch, developers and talent were let go. Spring Labs CEO Adam Juan told Bloomberg that it has allowed newly entering companies and existing established businesses to recruit more talent. The skepticism is warranted in many ways because this technology is nascent and untested at an industrial scale. Our hope is this presents us with a great opportunity to recruit talent, he said. So, what do the CEOs do when the market's down? They turn their attention to building blockchain projects and buying up crypto while everybody else is selling. Good morning, Gina. All right, last article up. Someone just blew me up. Said, wait, Brandon, did you just say that they're going to pay you to talk to your phone? Yes. I haven't talked about it. All I've been saying is, how would you have your cell phone for free for the next 5 years? But yes. How would you like to get paid for talking on your phone? Table that one. I'll be bringing that up probably in another 30 days. Top 3 mistakes investors make when managing their cryptocurrency holdings. Top 3 mistakes investors make. Pay attention to this. Money is older than recorded history. That is true. As long as money has existed, so too have counterfeiters and crooks. Issuers of currency have spent millennia preventing counterfeiting. Just consider today's paper bills, which are printed with special dyes on watermarked stock, sport serial numbers and security threads, and even hologram strips. Cryptocurrencies, by virtue of their algorithmic security and their consensus mechanism, generally don't have counterfeiting problems. Unfortunately, all too often, crypto holders assume that the security against fraud means immunity to all loss. Cryptocurrencies offer new ways to invest and to participate in the economy, but they also demand users to make efforts and take precautions unnecessary with traditional currencies. Many cryptocurrency portfolios exist on exchanges like Coincheck, Bitfinex, or Poloniex. These exchanges provide ease of use, but their internal protections are not always what users might wish. Yeah, we just saw that, right? Cryptopia got hacked. Some other hacker just stole data from 300 million people from the exchanges. So what's a crypto investor to do? Surely they're not expected to liquidate their holdings in fear of the next attack. Most holders think you should invest in at least one crypto wallet. Well, of course. You think? I say you need multiple wallets. You never have all your coins in one place. What's not immediately apparent to novices, however, is the diversity of available wallets. I think it's going to be Jairus Coleman. No. Rob Harris in Seattle is going to be covering wallets and exchanges, and Jairus is covering security. So all wallets share the same purpose, storing your crypto. Their forms can vary widely. Some are online, some are offline, some are software, some are hardware, or even bits of paper. However much you've invested and wherever you might keep your cryptocurrency, you should take care to avoid the most common investment mistakes. Number one, treating crypto exchanges like banks. Yes, that's number one. The name Mt. Gox sends shudders through longtime crypto holders. The Japanese company, now bankrupt, but once the largest exchange was hacked in 2011 for 1.35 million BTC, and in 2014 for $450 million of currency. More recently, a 216 hack cost Bitfinex users $72 million, resulting in a controversial strategy of socializing the losses across its user base in the aftermath. Security has recently improved across the industry, but investors should nonetheless take measures to permanently secure their holdings. As the InfoSec Institute wrote last year, vulnerabilities remain. Unfortunately, many cryptocurrency investors treat exchanges as if they were banks. Although exchanges do not offer the consumer protections mandatory to banks, on an institutional level, the United States Federal Deposit Insurance Company prevents individual investors from losing their money even should their bank suffer a fiscal disaster and fail. On an individual level, should a bank or credit card company find that a user's account was compromised, they will restore any fraudulent spent funds. As Mt. Gox victims know, a similar request for recompense to an exchange would be unlikely to have so happy an outcome. That's going to be the next level about these exchanges having insurance behind them. Not there yet, but I think it's going to happen. Neglecting taxes. Pay attention, we're in tax season. Although most cryptocurrencies have no government affiliation, too often investors assume that governments therefore have no interest in crypto earnings. Exchanges have begun offering tax guidance to the largest investors, but the vast majority of cryptocurrency investors should not expect an auto-generated 1099-K form in the inbox. In the United States, at least, the tax situation for cryptos remains somewhat vague, as the IRS has issued only a somewhat opaque pronouncement. But tax experts agree that investors should track the movement of their coins, the date of acquisition, the price paid for it, and once liquidated, the sum received. Although the rules promulgated in 2014 remain preliminary, they have already been enforced. And number three, losing crypto wallets. Suppose you withdraw your life savings in cash from the bank and put it in a sack in your basement. If your basement flooded, if rats nibbled your money, or if the boiler sparked a fire, you might think that your money, now sodden, shredded, or burned, was now worthless. In fact, you wouldn't be out of luck. The United States Bureau of Engraving and Printing offers a free service to replace mutilated currency. You'd get a lesson in fiscal responsibility, a great story for parties, and your money back. Yeah, I did not know that. If I heard about it, I completely forgot. I did not know. I'm going to read that one more time. The United States Bureau of Engraving and Printing offers a free service to replace mutilated currency. I didn't know that. I learned something new. I thought, hey, if your house burned down, you lost your money. I guess you got to insure it some kind of way or report that you have that much cash somewhere and then have evidence that it got mutilated. I guess there's got to be a process. Paper wallets for cryptocurrencies, though their offline nature keeps them safe from hackers, offer no similar protection against their destruction. Suppose your paper wallet is folded and refolded until the digits of your private key begin to wear away. Imagine a portion of it gets wet, obliterating 5 or 6 characters. You've lost whatever was stored there. And, of course, if you misplace your paper wallet, you have no recourse beyond hoping you'll find it again. By 2017, roughly 4 million Bitcoin had vanished from circulation. It's gone. Never coming back. 4 million Bitcoin. As cryptocurrency moves ever further into the mainstream, we can expect some of the rules of cryptocurrency investment to change. Consumer protection regulations might enter the books. Cryptocurrencies might receive their own tax forms, and privately managed holdings might become less technically daunting. Already, technological advances have increased ease of use. Cool wallets, for example, combines the security of paper wallets with the durability they have always lacked, while also allowing like exchanges for increased liquidity. As we forge ahead into cryptocurrency's second decade, I am sure that many such innovations are around the corner. I am equally sure that today's investors and tomorrow's should do their research and learn the ways of the crypto world. Learn from others' mistakes. Don't make them yourself. Good article. I'm going to post this in our community group for those that don't listen to my crypto talk, so they can always come back and read this. The top 3 mistakes investors make when managing their cryptocurrency holdings. Good article. All right, that is it for crypto news today. Unless something major happens tonight, I'll be back for late night. Should be back for late night crypto talk. So we'll see how the market's doing and what's in the news. I will be spending most of my day watching football. The Rams NFC Championship today versus New Orleans Saints. I'll be watching that today and doing some work. Those that keep asking me about the SIM cards, again, you can get them at www.remove. Let me put HTTPS. RemoveMyBill.com. And like I said, I was talking to Rob Harris the other night. Like, yeah, man, he was like, I haven't even mentioned the fact that ultimately they're going to pay you to talk on the phone. That is where this crypto technology is going. Like the very first article I read about data. Data is where all the money's being made. I posted an article on my Facebook page as well about behind MLM. You know, anytime somebody wants to research a company, they go and they look up behind MLM. You realize that almost 10 out of 10, it's going to be a negative spin on your company. They wrote an article on KGX before we were in pre-launch, before we launched any product, before we sold a single thing, putting us down for something we never launched with. It's clickbait. Why? Because he's getting paid for you coming to the website, clicking on ads. Advertisers where they're making their money. Whatever cell phone provider you have right now, they're not making their money off of you paying your phone bill. They're making their money off of selling your data. So what if we remove your cell phone bill? And then we tell you we're going to pay you to talk on the phone. Well, what? Do I have your attention? New technology. It's not just going to be cell phones. Next is going to be cable's going to be on the blockchain. Cable service. Everything that you're subscribing for. Watch Netflix. Netflix is going to be using some form of blockchain streaming service, and you're not even going to be realizing it, or technology, you're not even going to realize it. You're going to see them eliminate their phone bill or their monthly subscription. You won't be paying for Netflix. They're going to pay you because they're going to come out with their own Netflix coin. and you're going to have discounts. You can use your coins to do certain things. Watch. Amazon, Facebook, they're all going to have their own coins, and they're all going to incentivize you to use their service. Talk about a role reversal. This is the future. I'm just taking advantage of it right now, getting positioned ahead of time. All right, everybody, have a great day, and maybe I'll see you on tonight. Take care. God bless. Bye-bye.